Well, hi folks, time for a super quick update on metals. One of my very special members asked me to do this, so I'm going to do it, and I'm going to cover all the metals that I'm busy looking at the moment. So we've got gold, silver, copper, then we've got platinum, palladium, and uranium. Yes, uranium is a metal. So let's start with gold and have a look at what's going on. I've got some very clear views on several of these. Some of them I'm not too sure about. So let's start with the ones that I'm more clear about, and we'll start with gold. So gold, I think we've kind of reached this high here, this sort of all-time high. It's the third occasion we've reached it now. We formed a sort of a triple top. It was always likely that we'd pull back given the two reactions we saw on the last two occasions. So we have indeed pulled back, and we're just pulling back into support. Now I've got some key support levels below us, which I think we might need to reach. First of all, I've kept all of these charts super simple. I've got some support and resistance zones. I've got some support and resistance lines. I've got some trend lines and some Fibonacci studies. So basically just three things that we'll look at on each chart, and that'll enable me to go through them super fast. So gold, first of all, I think we can get some more pullback on gold. The reason is I think we possibly will get some more strength in the US dollar, potentially some weakness in the stock markets, and as soon as the dollar strengthens and there's increased yield on dollar assets and interest rates are higher, gold tends to suffer. So I think overall I'm bullish on gold. I think we'll break this all-time high at some stage at around about 2075. We'll probably move up into 2100, 2200, maybe 2300 later this year. But first of all, I think we need to gather some more liquidity. And the main supply zone for that liquidity is down here at between 1900 and 1880. In this area where the Fibonacci's begin, the 38 and the 50, and also where this horizontal band of support is, stretching back quite a long way. As you can see, there's always a lot of activity there, and it's a good area to be looking to buy into. I think we need to break this downward trend line and this green support line just to stop out some over-exuberant long traders and clear those out and maybe pick up a lot more buyers in this region here. That does mean, however, we've got to break below this green line, which is obviously a key level, you can see, for obvious reasons, and the trend line. So I'm waiting for a dip down into, starting at 1900, perhaps down to 1850, somewhere in that pink and yellow zone, which is a conglomeration of the sort of golden pocket, the two Fibonacci's, the 38 and the 50, and then this horizontal line going across. Let's go across and have a look at silver in the same vein. I think that silver overall, I'm kind of bullish, but we have reached resistance up here at the high, and we're pulling back a little bit more sharply than gold, and we've got some support levels beneath us. Same sort of thing, very similar. We've got this really cool yellow support zone here. You can see why, for obvious reasons again. That's a very key level, and it also happens to be the sort of confluence of the 50 and the 61.8% Fibonacci. So I think we need to get down there. It's possible we could even get back down to this rising yet nascent trend line, and that would take us down to about 2180, maybe 2150, somewhere around there for silver. I think because silver has industrial uses, and if we do see a turn down in the economy, it's going to have a bit more of a negative impact on silver compared to gold. So somewhere around 2200 to 2150 for silver. Long-term target for silver is back to these highs, somewhere at around just below $30, $29.90, somewhere around there, and then eventually a break up through there to form new highs. So that's my strategy for silver. I'll be watching that carefully along with gold. When it comes to copper, I don't want to repeat the cliche too often, but as you will probably know, it's called Dr. Copper. There's a reason for that, and it's related to building and industrial expansion in expanding and growing economies. And if we do have a potential decline in economic growth, it's going to affect copper. You can see we've already come off sharply out of this sort of resistance and supply and demand zone, barely hesitating on this way down, just touching that rising trend line. I don't like the speed with which it's come down there. If you're looking for trend line support levels to hold, you don't want this dramatic, rapid acceleration towards them, and normally that would signify at least a partial or temporary breakthrough. So I think for copper, the definite area to be looking at is a break below this trend line, a break below the 50% Fibonacci level here at around about 352, and then down into this area where this yellow band is. That's the next very important demand zone. That's around about 320, somewhere around there. 320, we could even get down to $3 or potentially even to $2.60, and that's right down here at the 78.6% fib. I think if we do get to that 786, that will be a fantastic area to buy. It's one of my favorite Fibonacci levels. Not only is it a 78.6% Fibonacci level, but it's also a key support level. If I just draw that line in there, going back as far as I can on these charts, you can see it's a key support line In fact, I should probably put a band, or a yellow band in that region instead of the red line, which I have now done. So that area there for me is the most interesting for copper, but we'll keep an eye on this area here around about the 61.8% Fibonacci level, this previous support area and this yellow supply and demand zone, and that's at around about $3.20. So that's my view on copper. Right now, don't like the way it's approaching this trend line. It's very aggressive, very steep, very sharp, and we'll probably see a breakdown through that trend line into a better area of demand at around 320. Let's look at platinum. It's interesting that all of these charts are actually pretty similar on metals, so I think it's similar strategy for all of them, except when it comes to palladium, which I'll talk about after this one. And you can see platinum, once again, we've sort of formed this high. We didn't even get as high as the March 22 high, which is quite a long way above there at about 11,190 or 11,200. We've dropped right back down to just above 1,000. The crucial area of support and demand is here in this yellow zone, and that's below us by some distance, and that would take us down to about 1,000. The 1,000 round number is just too tempting to break, I think, so we're going to have to get below there. We've got a trend line rising up underneath there, and that takes us to about 975, which is also where the 50% Fibonacci level is, in the bottom of this sort of support and resistance supply and demand zone. So I wouldn't be surprised if we saw platinum coming right back into this trend line at around about $980, but I would allow for a further drop below that down to about 925 and possibly around 900 or 875, somewhere in that region. I don't think we'll get that low on platinum. I think this area here at around about $1,000 or just below, 980, 950, 960, 970, somewhere around there, will provide a good test for platinum. And it's also a confluence of this yellow zone, the Fibonacci's, and the trend line. Whenever you see a confluence of several technical levels and indicators, that's always a good sign. So I think platinum, I'd be looking at just below 1,000 to buy. If we do find here, I expect a rally back up to these highs at about 1150, and then potentially up to 1,200. And then beyond that, we've got levels up to about 1,300, 1,320. So that's the idea on platinum. Overall, I think kind of bullish, but for the short term, a pullback just as in gold and in silver. I'm going to talk about palladium last because there's not very much to say, and I have a video up on my channel about this already. And my view expressed in that video hasn't really changed, so I'm going to link that video right at the end on the screen when I discuss palladium. But let's finish off this video with uranium, and uranium is a metal, as I alluded to earlier. And uranium, I think, again, I'm pretty bullish on uranium. We've got a really good support zone below us, big yellow band, which has been support over and over and over again. I think overall the macroeconomics on uranium are positive. I think we're going to see a lot more demand for uranium. We are already seeing that, and that aligns with the technicals on this chart. You can see all sorts of support, more or less where we are now, slightly below in this yellow zone. And then I've got a tighter yellow band, which we're just hovering above right now, caused by these highs here, and then the breakout from those highs, the back test of it, down to about 1982. This is the URA ETF, by the way, and then just bouncing back into it again over the last couple of days. But we have to allow for a dip down to about 1850, 1860 if demand for uranium in the short term dwindles off. But overall, I'm bullish on this. I'm looking for a move up to 24 and then eventually up to the high of this chart at around about 28 or 29 and then into the 30s. So we'll have to see how that goes. We're currently already long on uranium. That's the only metal, or in this case metal ETF, that we're busy trading at the moment. And then finally, palladium. As I said, this is not very exciting, palladium. So I've got a video up on the channel already, which I'm now linking. You should see it on your screen shortly. And my view on palladium is that we could get down to about $1,000 and potentially even lower, down into $800-900, somewhere around there. The reasons for that are all described in the video that's now linked on the screen. Have a fantastic trading day. And if you enjoyed this video, please give it a thumbs up. And if you're new to the channel, why not consider subscribing?